Happy Wednesday. Happy hump day. Welcome to the Tradespoon live trading room, stocks and options closing bell. Earlier today, we had some morning coffee. Today we're having afternoon, or now we're having afternoon. I just got a fresh cup and had a yawn as it tells me take a little drink. My name is Scott. I'll be your host, head trading coach here at Tradespoon, trading for going on 24 years. Teaching for about 20 of them. Here are the disclosures. Take a peek. You know them, you love them. And let's get into it. Howdy, Bob. It's quiet. It's light today. Where's everybody? Are they late? Well, their loss. We're gonna go ahead and get into it and see if we have stragglers. Good afternoon, Koo. What is going on with my presentation? There we go. Well, so we had a decent start this morning, and then we watched it give most of it back and actually break to the downside of the opening range. But pull back. Set a lot of my trade were bought situations. I'm sure you guys. The question is, can chips hold up, or are they going to start breaking down into the gap areas? That's going to make it a little more challenging to trade them. You'll see when we go take a look at our watch list, but certainly there's some concern there. Apple, Microsoft, yeah. Come on back. Pull back. We'll have a party when you get here. It'll be great. Stocks wobble amid new economic warnings. So the Canadian National Bank of Canada, I don't know. They raised their rate 0.25 point. Not like we follow them by any stretch. There's some concerns on the global front of the bear market and the slow recovery of China. But overall, I think nothing's changed from what we've seen. I mean, my posture is still the same, which is bullish. Still feel pretty good about everything as it's going on. Good afternoon, Koo. I don't know if I said hi or not. What else do we know? Stock market winners in 2023 are last year's losers. Oh, the dogs of the Dow theory, probably, huh? Interesting. What else? Gen X is totally unprepared for retirement. Yeah, everybody's unprepared for retirement. What are you talking about? The statistics are mind-boggling. No one's prepared for retirement. Come on. It's like 1 in 38. Volvo's new electric SUV will be its cheapest car. I'm just not seeing any news, and I'm not surprised. Oh, the U.S. is in a cardboard box recession. That's pointing to a sharp fall in inflation by the. I don't know what a cardboard. Does anyone know what that means? What is a cardboard box recession? Maybe good news for inflation. Inflation might continue to recede as fast. Okay, I don't know what that means. The housing market may not be recovering just yet. House prices may slide as steeper mortgage rates may have an impact. Yeah, we've talked about that. There's nothing new here, right? All bullishness may be setting the stock market up for a mother of all melt-ups. Okay. Sounds good. Nothing really there, though, at the end of the day, just like nothing really here on the economic calendar. The deficit came back about as expected. Did I see any news for the reversal? I think it was just that news out of Paris. It was global news about weakness in China. I mean, nothing, like I said, nothing really substantially new. Randall gave me some info. The cardboard box recession, a real-time indicator of less spending on items requiring boxes and cartons. the corrugated index. Jacques gave me some. You guys are amazing, helping to alleviate my ignorance. The cardboard box may reflect the decrease of cardboard demand, reflecting less shipping of goods. Okay. I mean, it seems like that's right in line with the dry shipping index as just a transport equivalent of an economic indicator, right? Like, would those two go hand in hand, do you think? I wonder if you looked at the cardboard box or corrugated box demand versus the dry shipping index, if it would give you a very similar read. I'm wondering. So yeah, anyways, all right. Fair enough. Thank you. Box happens to be the big box maker, and it's down on news. Let's take a look. Let's explore. Let's solve some problems. Oh yeah, nice bearish engulfing pattern. The volume is just not existent though, right? Like, that's a big bearish engulfing with hardly any sentiment behind it. Average at this point in time, 1.5. We're at 1.1. Maybe we get to 1.3. So I'd say 85% volume on this big selling day. That doesn't have me too shook. I would be expecting a selling day right around now anyways. So same analysis as many other bullish stocks. We had a higher high, higher low. And now what? Now if it comes back down, first place for me to look is right across here, 27.75-ish, right? Somewhere in there, definitely above 27. But if I stabilize and bounce off of this higher low, I'm fine. I'm thinking, yeah, looks fine. Next stop, we try to get up into this gappage. Well, maybe it pops up in there a little bit, comes back. Who knows? Who knows? Thank you for the information, everybody. I appreciate it. The cardboard box recession. I don't know. That sounds like a solution in search of a problem to some extent, right? Like, oh, well, you could look at this. Well, don't we already look at that in a couple of other places? I don't know. Maybe we do. Next week, we have plenty more. We talked about that this morning, but if you weren't here, nothing Monday, and then it's just a slew of data, consumer price index, CPI, and then PPI and the Fed. And we have sales and jobless claims, capacity utilization, industrial production. We finished the week with some consumer sentiment. Whatever we're lacking in new economic data this week, we will certainly make up for next week. There seems to be plenty there. Okay, what else? Okay. All right. What's next? Let's look at the toolbox. Let's start with SPY. So on SPY, we do know that we have a bullish forecast, but coming out of a consolidation, we seem to be in that consolidation as of now. If you look at the NASDAQ, this is where we saw the biggest signs of bearishness. If you look at this, yeah, that was a bit nasty there. So certainly concerning. Let's take a look at the IWM and the Dow. DIA? Dow looks fairly bullish. Okay. Nikola is now a penny stock. Oh my gosh, I know. I used to love saying Nikola. Okay, let's go to the IWM. And let's see what that has. Somewhere in the middle, really, if you look. Right? Somewhere in the middle. Okay. If you didn't see it, here's the research. It does look like we're due for somewhat of a pullback. And here is our heat map. Okay, Microsoft, Google, the big ones are getting beat up. Energy strong, utilities is strong, industrials is strong. Other than MasterCard and Visa, financials is pretty strong. I mean, most of the weakness is on our big boys. Nvidia's down, which is okay, but chips overall are hanging in there. Software is not doing great. Oh, that's interesting. What an interesting day. I want to trade Microsoft and Amazon, Meta. I'm fine with that as long as they stabilize. I think that's going to be okay. All right, let's go look at the charts. I do want to look at Nikola. 50 cents. Oh, I thought it was low when it was at $3. Cheap just keeps getting cheaper, I guess. Are they no longer going to make that? Nikola's only trucks, right? Like semis? Someone tell me if I'm right or wrong. I thought they were just semi trucks, and it sounds like maybe they're just not going to make them anymore. I don't know. You would think Tesla would like come in and buy it at that price and merge them, and they could then call the company Nikola Tesla, and you have the guy's entire name. That's fun. All right. All right, let's get a quiz. Let's look at the VIX. Let's see what we think is going on. Let's see. I got to pause and turn my air conditioner on. I should tweet it to my buddy Elon. Oh, Elon. Okay. Quiz time first. Quiz time first. All right. I'm gonna take this range here. 427 by 426.40. That's the range. Fred says it looks lower. He's going early. Whoops. 427 and above, A. 426.40 and below, B, C. And oops, and in but whoops. ABC. Okay. Oh, it's trying to make a reversal. I'm going to let you change your answer if you want. I'm going to go take a look at what Stella says. And then we can look at the VIX. Let's just see. I'm not expecting any signals, to be perfectly honest with you. I feel like this is the start of a pullback that could create some signals. Q says B. Let's get into the 1 day, 1 hour. Let's take a look. Stella says we're going to end up at 426.90. 426.90. Stella's a B. Stella is a B. Fred is a C. Ku is a B. Bob is an A. Then lower tomorrow, he said. Jacques is a B. Phil is a B. I'm going to join the B's. I think it's gonna hit this mark right here, right where we're at now. It's gonna try. It might even get up to 427.40 and then pull back in this candle, right? So I'm gonna be explicit today. It might even come up here, but then it's gonna end up with this, and then it's gonna grind it out, and then it's gonna fall back down, and then pop up at the end. Stella's gonna be right on. 426.90. I'm a B. Okay. Jacques a B. Phil's a B. Anybody else want to jump in? Man, numbers. I feel like sometimes I understand when we're light because I'm like, yeah, market's been hard. Has the market been hard? I feel like it's been okay. How's everybody trading right now? Are you booking some gains? Are you feeling good? Are you not doing as well as you would have wanted? What's got people not showing up when we're having our wonderful discussions? I'm curious. Need to know. All right, quiz is good. Let's take a look at the VIX. VIX got into the 13s today. That was magnificent. Not like well into the 13s, but into the 13s. I mean, look at this. This thing is just grinding still sideways. I still want a pullback. Like I want, what are we at? 427, 420, 7 points. I want 1.5, 1 3/4%. Give me one tomorrow, 3/4 on Friday, and then let me maybe come into it. See, not doing as well. It's not doing as well as I should. Frankly, listening to Vlad Bear sentiment too much. No. Oh, sorry. Look, I mean, we all have our perspectives. I just kind of read sometimes. That's my bad. I mean, it is what it is. There's a lot of people who are bearish, and there's still a lot of them out there. And I'm not saying, hey, this thing couldn't turn around on us pretty abruptly. I feel like I have what I need to see it, at least relative. Like, I'm not saying I'm going to predict it. But I am saying that I will adjust quickly. I will be water if it happens, right? You don't got to convince me for too long. I'll quickly come around, get to the right side. So, yeah. But as I look at this, I'm thinking, yeah, give me 1.5, 2%, and that still only puts us down here. This is a good spot right here. This is still convincingly in an uptrend. I have no problem with that at all. All right, so keep an eye on that. Now let's get to the VIX. I've been meaning to get to the VIX. I was so happy this morning. Oh my, look at that. Even now, even with what today's doing, the VIX is really low. Closing out half positions today, Fred said. Accounts at the high for the year. Not strange. Wonderful. Magnificent. Love it. Love it. Yeah, the VIX definitely is very low. Institutional fears at an all-time low since the pandemic. That's significant to me. Institutions less scared equals more confident. More confident equals more buying. The question is, do they have money to buy with? Well, when the employment is as good as it's been, the answer is yes. So I as much as everybody has some doom and gloom, I think that the variables are there for a bullish summer, maybe even an entire bullish part of this year. Who knows? Let's see what the Fed does next week. But in the meantime, what are we trading today? Probably nothing. We're at the end of 7 or 8 days. I'm with Fred. I've been closing stuff, not looking to put new stuff on, right? Taking profits, taking gains, tightening stops. Don't give it back. Waiting for the next round of trades to come. That's what I'm looking for. Let's get into the watch list. Let me know if you have any questions, concerns, yada, yada, yada. Top bulls. Yeah, I still don't see much out of the basic materials. Apple. Now, this morning with Apple, it was a big bullish engulfing, and we're like, oh, if it looks like this at the end of the day, we might have a hard decision that says, is this consolidation over? This is why I do show reluctance to trading early in the day, because now look, we don't have that signal, and we definitely have more of what we want, which is a classic consolidation down on diminishing volume. Yeah, I said anywhere from 174 to 176. We're at 178. I would still be fine with a little more pullback. But at this point, if it starts to turn, I think that was it. I think we got what we were going to get. Apple is definitely knocking at the door. Okay, so I'm curious how Stella sees this, because this stock is just, our relationship hinges on this, Stella. Oh, she did well. Okay. I'm like, please, Stella, don't tell me you can't see what's going on with Apple. It's magnificent. It's Apple. AI, I said I don't necessarily love these shark frenzies. I'll watch it, but not willing to trade that. Amazon. Whoa. Oh, that was nasty. However, it's not a like a huge volume day. I mean, it's gonna get more. 67 on 65. I bet we get to 75, 80 million. So it is, 20% more volume. But if it slows down and stabilizes again, anything above 118, we're at 121. I would be fine if this came back and then tomorrow it comes down a little more and then a little more. And then all of a sudden on Monday it does this. Would I take that trade in front of the Fed? Looks just like that one. You'd be glad you did, right? What am I looking for there? Another one of those. Yeah, I'm Amazon's on my short list, most definitely. Boeing. Yeah, the candle could make an argument for a flag trade. The stochastic still hasn't turned. So mostly a judgment call. BLDR. This is going to be one that we see somewhat frequently. Yeah, if you were in it, if you survived this little dip, a few stocks went through this. Some of them not as bad as others. Microsoft did that. If you notice, I'm going to leave my box right there. That same little move got me out of Microsoft in order to book a little bit of profit. Oh no, sorry, it was a little earlier. I guess I'm off on that one. Either way, at this point, if you're this is when you're taking profits. This is when you're selling, right? COP, nothing yet. Costco, I'm waiting for a signal. And it seems to be coming anywhere above this halfway point, and I'll be fine. So there's plenty of things that look okay. Canada must be burning down. Smoke and air quality in New York really bad. Expected to get worse. Airport delays and cancellations. Not good. Wow. I didn't know. Crazy. I'm sorry to hear it. We get that out here in the West. We'll have our own fires. We'll get fires from Canada, fires from California. We get a little bit of everything that kind of trickles into our air. The worst part is we have valleys, right? So we can get, in the winter, they call it inversion. We get our smog gets trapped in the valleys until the storm blows it out. It's normally a little better in the summers, but when we get those smoky days, it just sort of creates a soup of smog or smoke or whatever. It's the worst. Very sorry to hear it. I think Costco's on my short list. I mean, that's a good list already for me. Apple, Amazon, Costco. What else do we have? Nothing there, nothing there. FCX, maybe on a pullback. If I'm going to do materials, I like FCX. It's at a new high. If it pulls back to this 36 level, maybe even 35 to 36, I like it. FedEx, not yet. FXI, China's in a recession, in a bear market. We're not worried about it. GE, I'm still watching it, but it's a grinder. GLD, not much in gold. Oh, Google. I never really loved Google. I put it on because it did have some momentum. Oh my God, my platforms. I need to shut them down and relaunch them. They're screwy today. I mean, it kind of got one big, huge push, and then it's just nothing. Now it's kind of rolling over. I don't know. We'll keep watching it. It is one of the big boys. We'll see. Yeah, we'll see what happens. IWM, God, it's strong. 2%. All this is going on, and what's happening? People are more interested in small caps, which is bullish. So put that into the soup. Let's see how it tastes. Jets is still strong, but it's overbought. I would need it to pull back. You can see that's a recurring theme. From a technical perspective in this market, that's a recurring theme. McDonald's. McDonald's, good. Meta's coming back. I don't even know where I would want this. Somewhere between 242, 249. I could have quite a pullback here. I'd rather see it more around this 249 to 255 level. Plenty of room. Not a lot of volume. Let's just come out here. Not a lot of volume. Everything's fine. Everything is fine. Marvell, so it's pulled all the way back. You know, sometimes something like this, it's easier to go look at a line chart and be like, okay, still waiting for this thing to decide to turn around, right? When you see where it was today, you're like, oh, they wanted it, and then it just came back. Be patient. Let's be patient. Microsoft, ooh, that's a big one. There seems like that would, anyone know if there was news, a company in this Microsoft move? That's something. I mean, I still would trade Microsoft anywhere at or above between 315 and where it is now. I'm fine with that. Netflix is still overbought, needs a pullback. The new headset isn't loved. I hear it's kind of a weird one. I hear I hear that actually. That's funny. Nvidia, it's back at its lows. If it can hold up here, I want to trade it bouncing off of this support level. That's all I needed to do is just sort of hold up here and we'll see what happens. Oracle. So now you're starting to see the pattern, right? Most of what we're watching, the technology ones, the big ones, they're starting to pull back. As long as this pullback is average or less than average volume, no big like smash candles down, it all sounds fine. I think we're going to see setups. And I'll take those setups and hold it through what the Fed does. I can't avoid that, or at least I don't want to. Maybe the start of the summer doldrums and getting a little bit of a pullback. Agreed, right? Agreed. Yeah, it's an interesting time, but I think as long as my posture continues to tell me so, I'm going to keep being bullish. I'm going to keep a very close eye on things that tell me that bullishness is diminishing or reversing, and I'm going to try to make adjustments as quickly as I can. Pulte Homes hitting a high, rolling over. QQQ hitting a high, rolling over. SLV rolling over. Is VIX today pre-pandemic lows? No. Prior to the pandemic, I mean, and this is like literally October, November, December, even just before the pandemic, we were like 11 to 14-ish. I mean, it was real low. But this is the lowest we've been post-pandemic. If you look at January 2020 until now, this is the lowest we've been. Cheapest we've seen options in 3.5 years, basically, which I love. I think it's great. That makes me want to trade some calendar spreads. Definitely thinking about it. Definitely going to start doing it. Lots of uninvested cash for sure, Fred. FOMO keeps us higher. Yeah, maybe so. Fear of missing out. I mean, to some extent, that might be it. Just the fact that people keep thinking it's going to drop and then we don't. That could be it. And the SPY 426. Oh, okay, let's see how we're doing. Oh, right in the middle, towards the C end. Who was a C? Bob was a C. Fred was a C. It looks like. It's right at the edge, 426.40. That's the other side. We'll see what happens. But it's certainly meandering down near the lows of the day more than anything else. However, it's very interesting to me that as we meander around near the low of the day, Bob corrected me. He said, no, he was an A, then lower tomorrow, no metal. All right. I got you. So it's only one person that's a C. We'll see if it gets down there, if it stays in the B range. Oh, UNG. Question came in. When you say you will make adjustments with market changes, what does that mean? So I'm assuming you're referring back to me saying I'm going to be water. I'm going to be bullish until I see anything, and then I'll adjust. That adjustment would be first and foremost hedging to prevent losses in the beginning of a bearish move. But I'm going to be watching I would be watching the money flow and starting to move into more defensive areas of the market. I would be putting on trades that would account for the market moving lower, and I'm going to adjust my risk down. I'm going to adjust my number of trades down, and things like that. UNG is trying. The little engine that couldn't. Yeah, here's what I would like to see. I do think it's trying. Right now, I see like this kind of a consolidation. It's trying. If it can get up here and then pull back and not get down, like maybe like that, I'd maybe give it a shot. I would maybe give it a shot. Trades like what? Trades like if like butterfly spreads, like bear call spreads, where I would start to have bearish positions on. Broken wing butterflies to the downside, things like that. Puts, even if I get them on early enough. So, but that's a long way off, right? I'm saying in order for that to happen, what would I need to see? I would need to see the VIX spike, higher high, higher low, and then go through like a series of that. I would need to see money flow out of the NASDAQ, out of the Russell, into the Dow. Right now, it's primarily been into the NASDAQ, and all of a sudden we're seeing it flow into the Russell, the small caps. Not really anything in regards to the Dow itself. I would need to see sector rotation. I would need to see all the growth sectors that are leading start to roll over and break some support levels and start to move down. And I would need to see money flowing into defensive components, whether that's consumer staples or utilities, or anything along those lines. That's another thing that would help me to say, oh, you know what? I don't really like this. And all of those, the more of that I see, the more of that I'm going to make these adjustments where I'm trading less bullishly, then more hedging, then more hedging, then more bearishly, then more bearishly. And my entire portfolio would shift from delta neutral, or excuse me, from delta positive to delta neutral to delta negative. So Fred said that the SPY slipped sliding away. Okay, let's take a look as we get closer to the end of the day. As I said, we're not really. Oh, we're right at the transition point. We've now moved into C territory. Nope. Oh, that doji brought us right back. The market was trying to sneak one by me, so I started looking at it, and it went the other way. You're welcome. You're welcome, bees. I'm a bee too. It was trying to sell off, and then I spooked it into coming back a little bit. Oh, the VIX is still down at lows, though. It's like there's no fear coming with this. That's interesting. Financials continues to try to impress and convince us that it's broken its consolidation and it's ready to pull back and give us a trade and join the bullish regiment. That would be helpful. So that's trying to do a little bit more. The leading sectors, XLY, consumer discretionary, looks great, but it's got a dark cloud cover. So it's like it looks great, but it's overbought. We need a pullback. Well, of course we do. It just made a big move. Take a big deep breath in. Hold it. Take another deep breath in. Hold it. Take another deep breath. It's got to breathe out. That was the point of that exercise. If you did it at home, it's got to breathe out. Yeah, so right now, this dark cloud cover is to me saying, hey, You booked some gains on some retail or some discretionary stocks. Now get ready for it to pull back and do it again. Utilities, yeah, it's got a bit of a pop today. I'm not seeing anything too much in there yet, but we'll keep an eye on that. Staples, nothing yet. Industrials also, just like financials, wants to move into the fourth, but there's a rush for to be in fourth place between industrials and financials, both of which seem to have broken out. Which one pulls back and holds? Maybe they both do. Who are they joining? Well, we already looked at XLY. Let's take a look at XLC, Communication Services. Still strong. You'll notice it's this, all the areas that led this last move are now pulling back, which is fine. They're pulling back into buyable situations. XLC pulling back. XLK pulling back. Technology pulling back. It's bullish as hell, but it's pulling back. And financials and industrials seem to be getting more bullish, but also need to pull back. Yeah, we're in a bit of an overbought situation. We need a little bit of a retracement. That retracement would be very, very helpful. So that's what we're primarily on the lookout for. Okay. TLT. Oh, bonds. Because the government has to fund this new debt passage. It's wreaked a little bit of havoc in the bond market. I would expect it to settle down soon, but in the meantime, yeah, going a little bit crazy. Got to print $1 trillion to cover, right? We got to flood it. We got to flood it to some extent. See what happens. Okay. Yeah. I mean, look, I wish I could tell you that there were a bunch of setups and I wanted to trade them all. There's not. My posture is bullish for market posture. My trading posture is neutral, meaning I'm not really looking to put trades on. I'm not going to force trades. I'm looking to put trades on, but not today. There's no signals. Everything is starting their consolidation. Great. Let's see if we get another day or two. Let's see if the volume starts to dry up. Let's see if this thing finds new support levels at higher lows. Let's see if we get triggers before the Fed. I feel good about the Fed. I know you're like, Scott, you're not supposed to feel. But here's why I feel good about that. Because it is an opinion. Right? I see the data. The jobs data is good. Everything's good as far as what the Fed is looking at, except for they want the inflation to start moving again. That's why I'm leaning towards 1/4 point. But if they do 1/4 point, that's priced in. No one's like, oh shit, the Fed's putting another 1/4 point in. What are we going to do? They're like, yeah, we know they want at least 2 more of those this year if possible. And then they're going to leave it alone. And maybe mid to second half of 2024, things stabilize all the way and they can start bringing those rates down again to a sustainable, a more sustainable level. Okay. Yeah, that's it. I feel like our meetings this week are a little bit like the economic calendar this week, which is light, right? There's just not much the market's not getting much. There's a lot of uncertainty, a lot of indecision, and not a lot of news. So there's just a little push here or there, trying to read into a couple things. What I believe is that the buyer fatigue. We got great news last week. We bought on it. We got one of the biggest moves we've had in a while, 6, 7, 8 days in a row, or at least 7 out of 8, 6 out of 7, right? Where before we were getting 3, 4 days up and then a couple of days down. It was a much tighter, shorter cycle. But now we're seeing a greater cycle possibly extending that, and that's adding bullishness. But to me, it's buyer fatigue. There's no like, oh no, everything is so bad, let's sell. There's, okay, we don't have any news. We've made some money. Let's take some profits. Let's see what happens. That's what I'm seeing, which is good news, because if that's what we see coming into the Fed report, yeah, I like it. Latest on the Fed raise, the CME Fed Watch tool says it is more than 70. So just earlier this week, it was 65. Now it's 70. I'm in the 70 camp. And I actually, I for a minute there, I was kind of like hoping, like, I'm like, oh, I hope they leave it alone. But now I don't. The inflationary data stalled. I think they need to nudge it again. If they nudge it again, then they can take a break, see if the nudge is enough. If not, they can give it one more nudge. These nudges are what's making sure we don't like stall things out. Like they went hard and heavy at 0.75, 0.75, 0.5, right? Did we get 2.5s? I think we did, right? It was 0.75, 0.75, 0.5, 0.5. I mean, that was just like, bam, just getting our teeth kicked in. 4 points in a matter of 4 meetings, which is, 6 months. But now when they went aggressively that way, it curbed things. It curbed it without a significant impact on the jobs market, at least as of yet. And it now lets it be nudges. Let's nudge it and then watch. And if it's moving a little bit, then we can take a break, see if it still moves, and then say, oh, you know what? I don't think we need that last one. Or they can say, it's moved a little more but stalled. We want it to come down a little bit more. Give it another quarter point nudge. I'm going to commend the Fed. I feel like they're doing look, it's easy to say, oh, it's political. Of course, there's some politics to it. Of course there is. Always has been. It's easy to second guess and be like, you should have done this. Certainly they waited too long. They recognize that. Right now, I would say they did great. The Fed did great at the pandemic. Stepped in, intervened, really came and helped. Like we did well as far as that was concerned. Then they just didn't do enough coming out of that. They waited too long. Right? Waited too long. All right. Come on. This is a behemoth of an economic machine. Let's cut them some slack. I think we're in a good place right now. I think we're in a good place economically. I think we're in a good place as far as what the Fed sees and is doing. The VIX looks good. Sectors look good. Major market analysis looks good. I've got a good watch list of high liquidity stuff. I've got a plan for this week. Hopefully that we get a little bit more consolidation to give us some trade setups. And I'm going to take those trades and then I'm going to shampoo, rinse, and repeat. And if I need to make an adjustment, I'll make an adjustment. I'm going to keep the more bullish I get, the more sensitive I get to the tsunami indicator, to the subtle things that say, well, wait a second. What about this? What about the fact that we had 2 weeks in a row where money left technology and communication services and went to utilities and staples? What about the fact that we had money leave the NASDAQ and go to the Dow? If I see that, I'm going to make adjustments. I'm going to curb my risk. I'm going to look to increase my hedge positions and bring some balance. But if we keep getting what we're getting, I'm going to stay bullish. If the volatility keeps dropping, I'm going to implement calendar spreads again. I'm very excited for that strategy. And then we'll see where it takes us. So, all right. We're going to cut a little early, give out a fancy, schmancy, metaphorical gold medal. Today's is exceptional. Oh my gosh, look at that. What I say? I said it's going to do what the model said. It's going to pull back. It did. It's going to bounce. It did. It's going to end up at 426.90. Well, we're pretty close to that. Although this time as I look, it sells off a little bit. I'm going to give it to the B's. B's, well done. You're very smart. Very smart people. Oh, and look at that. The second I try to award it, the market's like, no, wait a second. I couldn't even finish my sentence and it drops back to the C's. I better wait. I don't want to be accused of gerrymandering the results. The sellers look like they want to close this thing down. Ooh. Okay. We're right back in the middle. I don't know what to do with this. I said I'm going to call it early. I tried to call it. The market hurried and corrected me. So I'm going to give it to the C's, which is just one person. I think it's Fred. Fred, Congratulations. The rest of us, oh, look at that. It's really starting to crank to the downside now. All right, fair enough. Fair enough. More consolidation. Solo virtual gold for Fred. Congratulations, sir. Well done. I'll see you guys on Friday morning. Hey, if this finishes down and then we get like 0.5 to 1% down on Friday, and then things start looking like they're coming back up on Friday, we may have some buy signals to talk about. So let's be open to it. Have a great rest of your day. Have a great Thursday. I'll see you Friday. As always, happy trading.